I'm Sam. I'm the head of the Academy here at Adara, and welcome to another daily update. Today, we've got some cool stuff to talk about. I want to start with a tweet by Dan Tapiero that says Bitcoin is now a part of the macro landscape. There should be no more debate about this fact. Top 30 largest world currencies by market cap and growing at the fastest rate of them all. Great chart. I will retweet every time Bitcoin moves up a notch in the rankings. So Chinese yuan at the top, followed by the dollar. It happens to put gold on here at $7 trillion. And here's Bitcoin down at $183 billion. So the idea is that one day it beats the ruble and moves up as a higher market cap asset. One thing to note is that Nick Carter wrote down in the bottom, and he says that instead of comparing it to M2, we should just be looking at base money, and by that, Bitcoin would be in 11th. And I'll leave the link for this tweet in the description below, and you can come in, leave some comments, and check it out yourself. The next thing that happened yesterday is that Kik considers shutting down the messaging app. So 70 employees were laid off on Monday from Ken, which is a subsidiary of Kik. The Israeli cryptocurrency subsidiary threw off all of their staff, and it doesn't seem very well. So right now, Kik is actually being investigated by the SEC for running a illegal securities offering by selling their Kik tokens to investors in the United States. And they've actually been pretty contentious about it. You know, they've challenged the SECs to say that they're going to fight it, maybe, and that they think that they're going to win. And we'll actually see if that happens. So they just had an investment round at a $1 billion valuation. And so Kik decided to hold an ICO in September 2017, raising $100 million, released the virtual token in 2018. But the SEC has come in and said that everything that they did was illegal, and they probably need to return investor money. So in addition to the Ken news of them laying off 70 people, the CEO of Kik, Ted Livingston, sent a drunken text to a CoinDesk reporter in the middle of the night saying, "Well, I know I've been drinking, but this ain't the drink talking. I'm fed up with this shit," he wrote. "We'll talk more in the morning about replacement, but I quit," he said, adding, "I have my ticket. I'm not going to jail for this." And that's probably because he probably knows that Ken and their offering was probably illegal, and they've been doing some other potentially fraudulent stuff if he's thinking about leaving the company. There was some news about Overstock, which came out a couple of days ago, and we'll cover that in a second, but it seems that a lot of larger projects are suffering because of some securities violations or SEC investigations. Kik actually mounted this Defend Crypto crowdfunding campaign that garnered support for their $100 million that they raised. But the SEC complaint filed in June painting the ICO as a last-ditch effort to stay afloat by the company. So it'll be interesting to see how this goes over in the next couple of days. I will be wondering if the CEO is actually going to quit, or maybe if it was just some whiskey-induced courage coming out. So we'll see. So Bakkt launched yesterday with their monthly and daily futures, and as can be expected, the launch was kind of slow. There was only around 38 contracts actually bought and sold, and that's not that much for the first day. CME Group didn't have much on the first day either, so I would just expect that over the next 6 months, the volume average would rise to pretty decent levels. But right in the first few days, it's difficult to get the integrations, and it's also difficult to get it out to all the people who would be buying it because maybe their brokerage hasn't integrated it yet, like my brokerage hasn't. So I actually posted on So I actually posted on Twitter about this yesterday. Nathaniel Whitmore asked who has takes that are not enthusiastic or schadenfreude at perceived launch failure of BACT. And I said that the biggest benefit of BACT is for the miners. So the CME future has been around for a year and a half now, but no institution wants to handle the long-term custody, which is going to be provided through BACT. Miners, on the other hand, now have a regulated way to fund operations and to hedge and to cover their production. And one of the issues that I brought up about the BACT contract is that the leverage is pretty bad. And this is similar also for the CME futures as well. So CME futures have 5 Bitcoin in every contract is their notional value. And the margin requirements for the CME futures are around $20,000, which means that you're getting about 2.5x leverage on the trade, which, I mean, it's okay, but it's not great. I mean, you can go to a myriad of other exchanges, and soon to be Adara, and find that kind of leverage for yourself, and find it pretty easily, all while trading Bitcoin. The BACT futures, though, I would expect that the margin rates would come down maybe in a year or two once the volatility is a bit better understood, and potentially once they introduce options as well too that will allow for the market makers to hedge. That may be one of the big reasons that they haven't lowered the margin requirements yet. The thing that I said was that BACT futures allow proper price discovery, that when the contracts expire, someone takes delivery. So that it actually puts Bitcoins from one person's wallet into another at the custodial facilities that BACT has, and it's going to be on a whole nother level that CME has provided. And mostly, I'd say that the BACT, if it grows to some size, is going to show that institutionals really don't want to have any custodial issues with Bitcoin. They don't want to hold it, they don't want to touch it, they don't want to put it on their balance sheets. They just want to have the ability to benefit from the price movements, from the price action happening with Bitcoin, which makes sense. I mean, if you're a large company or a large institution, why would you want to take the risk of a hack or theft or some sort of other issue with the network that could severely impact your bottom line? And lastly, I actually found this out from my broker when I went to go ask them about if they're going to integrate BACT into into my exchange that I trade options and futures with. And they told me that the fee difference between CME and ICE was pretty big, and that they don't actually subscribe to any ICE data right now because it's very expensive, and they don't want to pass that on to their clients. So the difference between CME and ICE is that CME has a package for all of their futures that they offer, while ICE, it's individualized between the different sectors. So there's energy, metals, in this case cryptocurrencies, and a few different other sectors. And so as the person purchasing these data sets, you would have to either buy all of them, which would be a very expensive cost in comparison to CME, or you're just buying one or two, which probably isn't going to work for a big brokerage exchange. So we'll see if that impacts the popularity of BACT going into the future, or if there's enough demand that they create some alternative data pricing so that their BACT futures can get more volume. Lastly, it seems that everybody's become an overnight repo expert in the past few weeks. If you've been following anything on crypto Twitter, there is the common misconception that the Fed is somehow injecting $75 billion daily into the repo markets, and that's affecting as a new form of QE is pretty much what some people are putting at. But that's completely wrong. The repo markets function as a lending facility, and the lending mechanisms of the repo market have been thrown out of whack, and there's a bunch of reasons for that. So one podcast that I listened to just this morning, actually, was with Jeffrey Snyder and the Macro Voices people. and he sits down to have a very in-depth and detailed discussion about what the repo is, what is actually happening, where the breakdown between the primary dealers and the rest of the repo market is, and the differences between the reserve, which the Fed has been focusing on, versus the collateral issues, which are really the cause of what's happening with the repo market. So I would suggest that you check it out. It's really good. Definitely the best listen of the day. So that's going to wrap it up for the daily update here at Adara. I'll be back tomorrow, and make sure to follow us, subscribe, and leave some comments if I missed anything on the daily news. All right, be back tomorrow. Thanks.